which will be your share capital, sum of your share capital divided by the number of shares issued. All of this must be before the buyback. Now you'll have 6,250,000 plus 700,000 plus 1.2 million divided by 2.5 million plus 200,000 plus 300,000. And that will give you your average price per share. I normally refer to it as APPS, and that value will be R2.72. Now, please note that the buyback of shares will only be recorded at APPS in your ordinary share capital note, always at APPS. And if you have watched the previous videos on shares and buyback, you will note that we will put that 163,200 in brackets and calculate the number of shares at the end of the year plus your share capital. And when you take your share capital at the end of the year and you divide it by the number of shares at the end of the year, it'll still give you that R2.72. This only happens if the last transaction was the buyback. Sometimes I can tell you that 60,000 shares were bought back and then not give you, let's say, that 1.2 million and ask you to calculate to fill it up. Now, to complete the whole thing, and I will give you that 2,940 and I will give you that 7,986,800. But with that 7,986,800, you don't have 163,200, you don't have 1.2. So there's no way that you can try to calculate your average price per share. So you won't have a choice but to take that 7,986,800 and divide it by 2,940,000. It'll give you R2.72, and that will be your average price per share because the last transaction was the buyback. It only works out if the last transaction was the buyback. Otherwise, it will not work out. Now, the loss due to buyback will result when our average price per share is less than the buyback price. And you were told here it was less than the buyback price by that 0.78 because they told you that the buyback price was 0.78 above the average price. Now, before I even get there, I will quickly calculate my net profit after tax. Obviously, I have 100% as profit before tax. I'm giving the income tax here, which is 490,000. So since I'm giving the income tax and I want profit after tax, I will still take that 490,000 times it by 72. However, here I will divide it by 28 to get my profit after tax. And loss due to buyback will be the number of shares that we bought back, which was 60,000 times 0.78, because that is the difference between the buyback price and the average price. The average price was less than the buyback price for that 78 cents, meaning that the 78 cents was actually a loss because it means that we bought back these shares at a price higher than the average price by 78 cents, meaning that they were bought back at R2.72 plus 0.78. That will be your buyback price. Now, if you wanted to calculate your buyback price here, you would have just used this and then use the reverse method to calculate your buyback price, which was going to be R3.50. But we don't need the buyback price here. We just need the loss, and the loss will be 60,000 times 0.78, which will give you 46,800. Please note that the loss due to buyback, you always put it in brackets. Now we have to calculate dividends. Your interim dividends, they said it's 60 cents per share. It was declared on the 30th of June 2019. Now that's a problem. We need to figure out how many shares were issued by the 30th of June 2019. You need the timeline. We had 2.5 million at the beginning of the year. We issued 200,000 on the 30th of May. So when you add the two, it'll give you the total number of shares issued. And that's what you will multiply by 60 cents because that's what we had in issue by the 30th of June. Okay. And the 30th of June comes immediately after May. So that's why I only took that 2.7. In December, please note that in December on the 31st, Okay, let me just continue with what I'm doing here. So my interim dividends will be 1,620,000. And then it says the company declared the final dividend on the 28th of February, which takes us back to the number line. You will notice that on the 31st of December, we issued 300,000 shares, and then we bought back shares on the 1st of February, meaning that the number of shares that were issued by the 28th of February amounted to 3 million minus 60,000 because those were bought back. So it was 2,940,000 that were in issue on the 28th of February. Had they said that the shareholders whose shares were bought back on the 1st of February qualify for final dividends, we were going to use the 3 million. But here they just kept quiet. So we just take the number of shares that were issued when the final dividends, when the dividends were declared. Here, the dividends were declared on the 28th of February 2020, and the shares that were issued on that date amounted to 2,940,000. When you take that 2,940,000 multiplied by 45 cents, it'll give you 1,323,000. And that'll be your dividends on ordinary shares, amounting to 2,943,000. And how did I get that 2,943,000? It's 620,000, which is your interim dividends, plus 1,323,000, which is your final dividend. Now, take your opening retained income of 2,550,000, added with 1,260,000, minus 46,800, minus 2,943,000. It'll give you your retained income at the end of the year, which will be 820,200. And that'll be it. That's it. That 1,323,000, I will record it in my trade and other payables. Okay. Please try classwork 7 on your own. Use it to prepare this. And check out the next video for solutions to classwork 8. Actually, classwork 7. Please don't forget to like the video, subscribe, and let everybody know about this channel. Thank you for watching. Khotso.